So it's the year 2030 and your $2,000 investment has turned into $200,000. You are one of very few people who caught what we call a 100-bagger. Every dollar you invested back in 2021 is now worth $100 in 2050. You didn't let your money depreciate in a bank, you beat inflation, and now you have $200,000 at your disposal. How are you going to use it? Maybe buy some real estate, a new vacation home, a big ol' iced out chain, or perhaps that new Ferrari that you've been eyeing for the last year. Guys, today I'm going to give my comprehensive guide on how to find a 100-bagger. We'll cover what to look for in a company, investment strategies to maximize your exposure in the quest to 100-baggerdom, previous examples of 100-baggers, and my key takeaways. At the end of this video, you'll be equipped with the tools to find the next 100-bagger. Stay tuned for the second video in this two-part series where I'll give several examples of companies that have the potential to 100x. Before we get started, all I ask is for you to smash that like button and subscribe to join our community of individuals passionate about changing their lives through the stock market. I put out weekly videos with the goal of providing you guys with the best free education on the stock market. Something so simple as a like and subscribe goes a long way in supporting the channel, and it makes me happy. So without further ado, let's get you a 100-bagger. It's 2030, you've invested in a company that has returned $100 for every dollar you invested in it. You're in your new Ferrari and a middle-aged Daniel Mack comes up and says, "Hey bro, nice car, what do you do?" Well, you could say that you learned from Isaac, but hey, let's hop into it. So what are we looking for in a 100-bagger company? We're first going to take a look at a study conducted by a firm called Motilal Oswal that analyzed 100-baggers in India. Oswal claimed that the single most important factor in finding 100-baggers is growth in all dimensions, specifically in sales, margin, and valuation. So to study 100-baggers, we have to start with studying growth and how it happens, and most importantly, how it endures. Our first step is finding a small company that has high odds of becoming a 100-bagger. Take a large company like Amazon, for example. They would have to grow massively to become a 100-bagger at this point. This is an amazing company and a great investment, but it is simply too big right now. For a company with a $1.7 trillion market cap as Amazon has at the time of this video, it is almost unfathomable to think that the market cap can 100x. So we have to shift our focus to micro and small cap companies with market caps of $300 million to $1 billion. Out of the roughly 3,000 publicly traded companies in the US today, 40% are micro caps. Now call me Captain Obvious, but many big companies started out small and guaranteed there are several companies that are just waiting to blow up. Take Apple for example. This company, which currently has a valuation of $2 trillion, started with a $10,000 investment in 1976. Similarly, Subway, which generates over $10 billion today in sales globally, began with a $1,000 investment in a single sandwich shop in Connecticut. In a study of 100-baggers by Martelli, he concluded that 68% of companies they analyzed were trading below a $300 market cap at their low. Now, just one point of caution is not to start with the smallest market caps because risk increases the smaller the market cap, and we'll leave that to the more well-trained penny stock traders who trade with massive position sizes, stream decks, and have ultra-fast internet connections. Next, we're going to examine what every 100-bagger in the last 50 years has had in common. And that's massive growth in earnings and a high multiple on those earnings, also known as the twin engines of 100-baggers. A good case study on a 100-bagger, MTY Foods by Chip Maloney, highlights these principles. For reference, MTY became a 100-bagger in just 10 years from 2003 to 2013. If you're not familiar with this company, it's a Canadian franchisor of quick service restaurants such as Extreme Pita and Thai Express. The path to 100-baggerdom started with its president, Stanley Ma, who outright bought 20% of the company when he became president. All in all, he owned 29% of the company, and as an owner-operator, which by the way is a very key facet of 100-baggers that we'll touch on later, he had every incentive to make his investment work. Now, some key factors of MTY's success is that they raked in cash with 70% margins, and at the time, they comprised just a small fraction of the fast food industry. Ma created 5 new restaurant concepts and bought 19 other restaurants. These new locations generated massive profits. So essentially, he reinvested already high profits into more high-earning restaurants that created rapidly growing revenues and earnings. However, it wasn't rapid growth alone that rocketed MTY to 100-baggerdom. Price to earnings multiple expansion played a massive role. This is also called the PE ratio. In 2003, investors paid 3.5 times earnings, and by 2013, PE was 26 times earnings. So ultimately, the combination of rising earnings and a high multiple on those earnings, as shown by the PE ratio increase, is what drove these insane returns. Remember Stanley Ma from MTY? He was an amazing owner-operator that played a key role in rocketing MTY to 100-baggerdom. In this next section, we're going to talk about the owners behind 100-bagger companies and the traits shared by these men and women that were influential in the trajectory of their respective companies. If you take away one thing from this section, it is that smart money, aka you, after this video, invest with people who own a lot of the stock that you are buying. So let's dive into the curious case of the owner-operator. People with their own wealth on the line make better decisions than those who are hired to control the finances of a company. It's such a simple concept. Now imagine if Warren Buffett approached you and offered to manage your money. You'd be out of your mind to refuse. Similarly, when you put your hard-earned money into a company, you're trusting that the owner, the CEO, the board knows what they're doing, and it helps if they are invested alongside you. Consider the greatest owner-operated companies of the last few decades: Bill Gates of Microsoft, Steve Jobs of Apple, Warren Buffett of Berkshire Hathaway. The list goes on and on. Oftentimes, we tend to just look at the numbers of the company, how it performs, how much cash it brings in, what their average rate of return is per year. However, it's important not to overlook the people running the company and who are invested in the company. These are the people who will bail their company out of financial disaster. These are the people who employ seemingly unconventional methods, such as John Malone at Liberty Media, who hated paying taxes, so he minimized pre-tax income, which in turn created a bloated PE ratio since he's trying to reduce their earnings. Professors Joel Schuman and Eric Noyes found that a portfolio of publicly traded stocks represented by the world's wealthiest individuals offers a good deal. This is a seldom talked about advantage that doesn't exist on a financial statement. When you're looking at investing in the next 100 baggers, think of whether their respective owner-operator will be the next Jobs or Buffett. I'm not a financial advisor, but invest your money with these men and women. Now that you know what to look for in a stock that has a 100-bagger potential, I'm going to share the secrets to portfolio management as well as strategies that will help you to hang on to these companies that 100x. Let me introduce you to the only portfolio strategy you need, starring the coffee can portfolio. Ever heard of it? If so, go ahead and drop a like. If you haven't, well, go ahead and drop a like too. Okay, so I took a brief poll of roughly 70 people on my Instagram, and 92% of respondents didn't know what this strategy was. This strategy goes way back to the days of the Wild West. People will put their valuables in a coffee can and put it under a mattress. The premise is simple. Once you've found your best stocks, let them sit for years. For our purposes, let's just choose an arbitrary number of 10 years. This portfolio also protects you from yourself. Let me explain. Let's first examine why investors tend to overmanage their accounts. Their so-called diligence, keeping up with earnings, adding and subtracting positions, and acting on sale recommendations actually can prove detrimental to the pursuit of a 100-bagger company. The biggest hurdle to hang on to these stocks that 100x is stomaching the ups and downs. A coffee can method is a foolproof way to save you from acting on price volatility, which oftentimes is a hallmark of these micro and small cap companies. The essence then of a coffee can is to protect you from yourself. Your own personal bullishness or bearishness on the market doesn't affect this portfolio. If you are what we call perma-bear and have a negative long-term outlook on the stock market and the economy in general, consider this. So you're telling me that you'll outperform your best investments today by trading the market in and out over the next decade. Most research actually suggests that overtrading hurts your returns in the long run. This portfolio speaks to the essence of finding a 100-bagger, and that is that this requires time. In the second part of this series on 100-baggers, I'll go in depth on a stock that meets all the requirements of a 100-bagger. However, I'm not promising you returns this year. I'm not promising you returns in 2024. In fact, I'm not promising you returns ever. But you give yourself the best chance of finding a 100-bagger if 1, you invest in a quality, profitable owner-operated company, preferably with a microcap, and 2, you give it time. I love the story of a man who had amassed a large quantity of stocks in his portfolio and invested about $5,000 in each company. He didn't look at sale recommendations and company outlooks. Back in the day, you get a certificate for every stock purchase, and he would take this certificate and put it in his safe deposit box. By the time of his death, he had amassed a massive portfolio. Some of these stocks lost most of their value, while a few were worth 6 figures and one was valued at $800,000, all from a $5,000 investment. What an inspiring story of the coffee can method at its finest. For your coffee can, I'd stick with more established companies that have massive growth potential and the ability to continue rapid ascension in their niche for a decade or longer. Now that you know that time is the most crucial factor in letting a stock in your portfolio 100x, let's take a deep dive into stocks that have reached 100-baggerdom and see what lessons we can learn from them. Let's start with the case of Pepsi, which was a more traditional 100-bagger. Although this story of a company company started in the early 1900s, we'll start with their business in more recent times. In the early 80s, Pepsi focused on its international expansion and was in nearly 150 countries by 1985. In 1986, it acquired KFC and Taco Bell. In 1989, Pepsi acquired leading UK snack brands Smith Crisp and Walker Crisp. In 1999, Pepsi signed a massive commercial trade agreement with the then Soviet Union. In 1994, Pepsi partnered with Starbucks to make ready-made coffee drinks available to US consumers. Within the next few years, they acquired Aquafina and Tropicana. The two key takeaways from Pepsi is that they had consistent high gross profit margins that were greater than 50%. In addition, sales increased from $192 million in 1962 to $70 billion in 2020. During this time, Pepsi would have returned over $1,000 for every dollar invested. Now let's look at Monster Beverage, which rocketed to 100 baggerdom in just 10 years. Obviously, this is not a typical example, as most 100 baggers took between 20 to 40 years to reach those levels of return, but I think you'll find some valuable lessons here regarding what to look for in these companies with the potential to grow as rapidly as Monster. This story starts with two entrepreneurs that moved from South Africa to California who paid $14.5 million for Hansen's natural soda and apple juice in 1992. These immigrants later became billionaires in less than a decade. Here's how. In 2001, they decided to focus on the energy drink market and launched Hansen Energy, but this fizzled out once Red Bull came on the scene. During their 2003 earnings call, management revealed the real reason why they lost to Red Bull. At the time, Hansen was not large enough and did not have enough marketing behind their brand to compete with Red Bull. Red Bull spent years establishing the brand and spent much more on advertising than on their sales. From 2003 to 2006, Hansen's increased their sales and marketing employees from 114 to 591. They not only spent money establishing their brand, but they worked on enhancing the distribution process of their drinks. They landed a WIC program that gave them rights to produce 100% of the fruit juice that the program offers. Their marketing team found that the majority of energy drink beverage drinkers tended to be men, so they designed a black can with a very macho bear clawed M. Starting in 2003, earnings increased on a quarterly basis by 20, 40, and then 100%. In 2003, quarterly earnings growth was up to 120%, and by the fourth quarter, it was up 220%. Price earnings ratio also increased. In 2001, earnings were 4 cents per share, and its PE was 10. By 2006, earnings were $1 per share, and PE ratio was 50. Monster became a 100-bagger in just 10 years, and it grew 50% every year. Like I mentioned before, this is definitely an outlier example in terms of the time it took to reach 100-baggerdom, but this serves to show us how powerful high growth in sales and rising profit margins are. So to recap, the first thing we're looking for when doing research on a company is to focus on micro and small caps. Investing your money in large companies now limits your upside because, for example, expecting a company with $1 trillion valuation to 100x seems much less likely than a company with a $100 million market cap 100xing to $30 billion. Next, we want to look for companies with the twin engines of 100-baggerdom that include massive earnings growth combined with a high multiple on these earnings. In addition, we would prefer to invest our hard-earned money alongside owner-operators of these companies. Anyone who has a vested interest in a company has it in their best interest to grow that money. Investing, especially with billionaires, exponentially increases your odds of this company returning 100 times your initial investment. Lastly, you want to emulate a coffee can portfolio style of management when it comes to holding these companies. Giving your investments time to grow with a set and forget it attitude helps to protect you from analyzing every sale recommendation and acting on it. Now, I'm not telling you to completely ignore your portfolio, but the due diligence that you do on the companies that you invest in for the long term should trump news such as inflation, rate hikes, and impending economic downturns. Remember, time is the key when looking for 100-baggers. So your homework is to go and start looking for companies that you're interested in and see if they meet the requirements of 100-baggers that I've listed in this video. I'll be releasing a detailed case study of a stock that I believe will 100x in the next video, so stay tuned for my analysis of that, and when I publish it, I'll link it right here. In the meantime, let me know down below the companies that you think have 100-bagger potential. If you'd like to send me screenshots of your findings, feel free to send me a message on Instagram at Trader Isaacs. Oh, and go ahead and give me a follow on there. I give stock recommendations as well as tips and tricks that you won't want to miss, so go ahead and give me a follow if this sounds like something you'd need, which you do. Also, if you want to learn more about 100-baggers, I highly recommend purchasing the book 100-Baggers by Christopher Mayer, which is where a lot of the information found in this video is from. Anyways, I look forward to seeing you guys in the next stock video where I go in depth and I walk you through my process of analyzing companies that have 100x potential. If you've made it this far, thanks for watching and I look forward to seeing you soon. Peace.